Good morning, everyone. Welcome to Pre-Bell with William O'Neill India. My name is Rajashekhar Kongari, Equity Research Analyst. Before we go ahead into this podcast, I would like to state the disclaimer for most of our webinars and podcasts is that whatever stocks we discuss are intended only for educational purpose and should not be taken as an investment advice. Let's look into Nifty's daily chart to get the overall view of the market, how the Indian market is placed, both on general perspective and the O'Neill perspective. You can see yesterday's action was very good on the Nifty front. If you observed, Nifty has made a new all-time high of 18,614. That is 10 points above the previous all-time high, which was made in October 2021. So Nifty took more than a year to make a new all-time high. During this year, lots of things, both on macroeconomic front and market-wise, many events have happened. Inflation was a major market dragger across global markets. However, Indian market stayed resilient throughout the phase when global markets were troubling fears with high interest rates and high inflation rates. However, Indian markets and Indian RBI has also maintained good rapport with the markets. They took necessary measures so that Indian markets doesn't succumb to selling pressure. In the last 5 trading sessions, Nifty closed in the green, but the only thing that is concerning is volume being on the lower side. You can see last couple of weeks volume has been below average. If you see the volume section here, some of the analysts feel that this thing will happen because most of the times during this time of the year, global US market is in a holiday phase, so FIIs might not do trading or investing that much when compared to other months. Even in November last year also, you can see some of the candles are below average. So similar action is expected this year as well. This is mostly because of less participation from the institutional investors. That might be one of the reasons for the low volume. But Nifty making a new high on low volume is not a very high positive sign. It's a sign of cautiousness, as we talk about in our webinars as well. When the market is making, or when any stock is making a new high, we would want the support from volume section as well. That gives a double impact. Currently that is missing, but in the coming trade sessions, if we see a good volume and Nifty closing in the higher half and making a new high, definitely will be a positive sign. And we would like the broader indices, Nifty mid cap and small cap indices, also to join the rally. Currently they are underperforming when compared to the Nifty. When the broader market indices also joins this rally, definitely we'll see more of the breakouts happening, and the probability of success in these breakouts will also increase because most of the breakouts will happen from these broader market indices. So we want the participation from these indices as well. Coming to the market structure from O'Neill lens, we are in confirmed uptrend. We have been in confirmed uptrend and we have added a few stocks to model portfolio, and we have been adding the stocks as well. Currently, when we are in confirmed uptrend, it is very important to track weakness in the market as well, because the market will not go linearly higher. It will find some hiccups in the upward trend. Some profit booking or selling pressure might come in. So distribution days help us to track weakness in the market. Currently, distribution day count is at 1, which is not a major sign of cautiousness. If the distribution day count increases to 3 or 4 and Nifty retraces back towards its key moving averages, by then we might change the market status to under pressure. In such a scenario, we'll be booking out profits in model portfolio stocks and which are underperforming, and our additions will come down slightly. That is, our aggressive nature will come down, and we'll be looking out for stocks only which are giving very strong breakouts and which are outperforming the general market. Some of the stocks which are in news and which will be on the radar today are NBCC has received work orders of more than 270 crores. These work orders are related to construction of works in Amrapali Corporate Hub at Gurugram. Filatex Fashions, which is a Hyderabad-based company, is planning a capex of nearly 300 crores in the next 1.5 year. The company is planning to utilize these funds to install another 500 machines because of higher demand for their products. The company also believes that this additional capex of 300 crores will generate 400 crores in the revenue for the company, and also provides an employment of more than employment for 10,000 workers. Five-star business has come up with their results. The results are very good actually. If you see on most of the fronts, it has given good growth rates. Its disbursements for the quarter have increased more than 127%. This is quarter-on-quarter basis to 803 crores. Bottom line, that is profit after tax, increased 22%. Again, quarter-on-quarter sequentially to 144 crores. The assets under management for the company increased 24% year-on-year basis to 5,700 crores. And the net interest margin has increased to 17.6%, whereas return on assets and return on equity came in at 8.7 and 14.7% respectively. By the end of September quarter, the company has a network of 352 branches across the country. One of the positive news for the Indian market that macroeconomically is falling in crude oil prices. This is majorly because of decrease in demand for the crude oil. China is also under slight or the demand from China is slight down because of rising COVID cases there. The price of Indian basket of crude oil has hit a 10-month low at $88 per barrel. This is a very positive sign for the Indian economy. This is because RBI has estimated the Indian basket crude oil to be around average around $105 for the whole FY23. So anything below $105 on average basis will definitely positively impact the economy. Our current account deficit will come down because we are net importers of crude oil. So our spendings on the crude oil will come down, which will strengthen our rupee as well. Coming to the institutional activity, foreign institutional investors have bought nearly 935 crores of equities in the Indian market yesterday, whereas domestic institutional investors have bought 88 crores of equities. This is on net basis, that is net buying minus net selling. US market closed lower yesterday overnight, that is almost 1.5% lower. Dow Jones 1.45, S&P 1.5% down, Nasdaq 1.5% down. So all the three major indices in the US market closed nearly 1.5% lower, which is not a good sign. However, Asian markets are not taking these negative cues from the US market. They are trading on the higher end. Both Shanghai and Kospi are trading in the higher end, whereas Nikkei is trading 0.6% lower. So there are no major strong global cues on either sides. US market is giving negative cues, whereas Asian markets are giving positive cues for the Indian market. If you look at SGX Nifty for the opening on the Nifty index for India, SGX Nifty is trading at 1868. That is, if this happens, definitely Nifty will make another new all-time high in the today's trading session. We would like the volume also to be on the higher end, as mentioned at the start of this session. If the volume also comes in and Nifty makes a new high, definitely new bulls will definitely rejoice, and the number of breakouts happening in the market will also definitely increase. Coming to the chart of the day, we have picked Apollo Tyres. If you have a premium subscriber, you would have known we have added the stock yesterday. You can see the action why we have added. I'll try to explain from only lens. One is the stock has formed a very good base pattern. Couple of the factors regarding the base are the stock has not breached its 50 DMA during the base formation. That is a good one of the good sign. Another good sign is that volume trade up between the base formation. You can see most of the bars are below average, and a couple of bars which are above average are blue bars, which make a positive side. Previously, the stock tried to break out this candle. The volume was also very good, but it faced resistance at its pivot of 303 rupees. That is the reason we have not added the stock to portfolio at that moment. However, after that, in the next session only, the stock has given most of its profits and it reached its 50 DMA as well. However, from 50 DMA, it has rebounded strongly, and the volume was also above average, which is a very good price volume action. So, the stock coming back to its ideal buy range, and overall market structure is also was also looking very good. So, this is the reason we have added this stock. This is on the technical front. Fundamental front also, the stock has been doing very good. EPS of 60, master score of 70 are not so bad ratings. So overall, the stock was looking very good on one parameters, and that's the reason we have added. So if you are looking for fresh investments, this stock definitely will will be in play. If you have a good export, if you want to increase exposure towards the market, you can look for this stock for investment uh, according to your risk appetite. Thanks for joining today's pre-bill. Hope to have a good trading session.